a 52.5 debit call spread and paid about $1.50 for each of those. So did it very small. This is only a $300 bet for us. With Wells Fargo, you can see this is the chart. We've had a very, very rough July and good part of August, kind of the beginning part of August. But actually since then, Wells Fargo's had really, really strong performance. And on Friday, when we actually entered this trade, it was up pretty nicely on the day. I thought it was going to kind of rally up higher, but really what we're doing is we're playing the breakout here. And with our break even right about where the stock is trading right now, we just need the stock to trade anywhere above this level between now and October expiration, and we have a chance to make money. Now, the reason that we decided to go with a debit spread versus doing something like a credit spread or iron condor is because implied volatility, as you can see in the top left-hand corner of your screen, is at the 14th percentile. So implied volatility rank is actually fairly low. So we want to target those strategies that don't take advantage of a decay in volatility, but actually might take advantage of an increase in volatility across the board. And so debit spreads and ratio spreads and calendars are some of the strategies that you want to start to use to take advantage of possibly move higher in volatility. Now, in this particular trade, we're playing it more directional than just volatility because we have one option, we're long one option and short one option. We're just playing more of a directional trade in the market here with Wells Fargo. And again, adding to our positive deltas in our portfolio to help balance us out. The other trade that we made on Friday, one I'm very, very excited about, is actually an Aapl. So Aapl, because of the recent sell-off that it had last week, gave us a great opportunity to sell a very wide strangle in Aapl. So I really like this trade. As always with these strangles, make sure that you start your position size very small with these strangles. This is something that we're going to cover actually tomorrow night and Tuesday night on the group coaching webinar talking about trade adjustments. But one of the big things with strangles and any type of undefined risk trade at the beginning is you have to start small with that position because there is the risk that it goes to that extreme and you have to add more options to the position to help protect it. So you have to basically throw money into the position, throw a little bit more cash at it to actually increase your probability of success by making a better strategy and adjustment. So start small with these strangles. I only did 2 in my portfolio. This very well may be a case if Aapl goes completely against us that we start scaling this up to 4, 5, 6, 7, or 8, as high as 8 strangles in this thing to help recenter the strategy and take in a massive credit to help protect the position. So again, we're going to be going over that a little bit more in the group webinar coaching that we're doing on Monday and Tuesday. But that's just a little bit of insight into kind of the future strategy in case this goes against us. But right now, Aapl's got really, really great implied volatility. We'll take a look at that here in a second. What we did with Aapl is went all the way out to October. Again, give ourselves a lot of time. We sold the 110 call on the top side and the 90 put on the bottom side. So we did both of those, the 110 call and the 90 put. We did both of those for a total credit of $140. So it took in $140 on this very wide strangle. Now you'll notice that we actually gave ourselves a little bit more room to the top side, given the fact that there's an announcement coming out from Aapl on new products, and just generally Apple's been very strong except for the news this week about that hack and all those celebrity photos and stuff. So news for Aapl has generally been very strong. The stock has been very strong. So I don't want to discount the fact that it could run higher much more quickly than it could run lower. So we've kind of skewed our strangle just a little bit to the top side based on just my personal assumption of where Aapl may go as we head into September and October. So if we go to the chart here of Aapl on our Thinkorswim platform, you can see that the stock's been beaten down just about 2 days, but had a huge discount. These 2 days basically wiped out the better part of 3 weeks of trading in Aapl. So it's very, very quickly how quick the stock can drop if it does. But it's sitting right now about $99. And we did the 90 strike, which is all the way down here, 90. So we did the 90 strike below the market, and the 110, which is really off our screen. We don't even have it on our screen because 105 is up here in the top right-hand corner, if you can see that. And we did another strike that's $5 away from that. So you can see we've gotten a lot of distance between ourselves and the market. and gave ourselves just a little bit of extra room on the top side compared to the bottom side. But the reason that we were able to do this triangle so wide is because implied volatility for Aapl is now up at the 66th percentile. So it's now definitely above that 50th percentile. We can start being more aggressive with our option selling strategies because this gives us a wider market of options to sell. So option premiums across the board are much, much wider. If we actually go to the trade tab here of Aapl, you can see where we actually placed our strangle. So let me just open this up here a little bit. We got to open up all of these strikes to view exactly where we placed our strangle. Let me see if I can capture it on both sides, and I just can't get it on the top side. So on the bottom side, this is our put strangle, our put side at 90, and you can see that the probability of success of just this leg of our strangle is 82%. So it's extremely high probability of success. Less than 18% chance that Aapl goes down and closes below 90 by expiration. So very, very high probability of success on the put side. And likewise on the top side, on the call side, we moved it out just a little bit more, gave ourselves a little bit higher probability of success of Aapl getting up to about 110. So the probability of Aapl getting up to and closing above